All right. Thank you to everyone who's here joining us today. My name is Lisa Partida with Home Again LA. And tonight we have our friend and partner, Tom Fuentes with Bank of Hope. So tonight's topic is going to be your income and expenses. So Tom, take it away.
Thank you, Lisa. Yeah, so your income and expenses, there's two sections. This one's actually kind of pretty quick. So we'll probably get through it pretty fast. Anyhow, so the first section of your income and expenses is going to be income. And we're going to discuss the different types of income and ways that you receive income and how to read and understand a pay statement. And then the key to income is what income actually is. So income is money that you receive. It's income that's coming in. And there's several different types of income. Sorry, I may have cut out a little bit. My internet's a little spotty today, so sorry if I cut out. But yeah, so there's several different types of income that we can identify, right? There's earned income, income from assets or investments, public benefits or entitlements that pay money, other types of benefits or entitlements. So basically, earned income, it's basically income earned from working, wages from jobs, from tips, from contractual work, or through self-employment. Maybe you're an entrepreneur. You can also get income from assets or investments. So assets are things you own. Examples of this would be like stocks, ETFs, mutual funds, bonds. An asset also could be something like your truck or something like that, or like your car. Public benefits can be things like SSI, SSDI, things like that. Other benefits can fall into several different categories depending on your situation. There's different types of childcare subsidies, transit subsidies, housing subsidies, utility assistance, and things like that. And then under other income, which is something that we kind of talk about a lot in these workshops from time to time, is like other income, monetizing hobbies or things like that. Or it could even be considered alimony, child support, or even money that you get in the form of gifts as well. Now that we understand income, let's understand the difference between gross and net, okay? And this is generally money that you're taking in from like an employer, for example, from working. So gross income is your total income without any deductions. And then that net income is going to be income minus deductions such as Social Security and income tax. So net income is what you actually save, share, and spend. Net income is basically equivalent, or it basically is your take-home pay. If you owe money, your creditors may garnish wages from this wage through wage garnishment. It could be things taken out such as back taxes, delinquent debts that you owe, or child support that you owe. So don't forget that if you end up having these types of garnishments, then it would be deductions out of your check, right? Yeah, so there's several ways that you can receive income. You can also receive money in the forms of check. You can receive money in the forms of cash. In the participant guide, there's going to be try it sections. We kind of just brush through it real fast during the workshop. So you can do this on your own time. But what I want you to do is, as for homework, what you're going to do is you're going to get the participant guide and think about the different ways that you receive income. Make a pros and cons list and look between both of them to decide what's best. I'll give you an example of this, right? So identifying your pros and cons, we could actually come up with things like, okay, what are different pros and cons that I would have in the forms of income I receive? So in this case, we're talking about cash, paper checks, direct deposit, payroll cards, or electric benefits transfers. So there's several different pros and cons that are associated to each. Let's talk about a couple of them. So pretty simply, benefits of cash, generally accepted at most retailers, places that accept cash. The money's available to you right away because you have it. A con of cash could be stolen, could be lost, could be destroyed in a fire or flood, for example, right? So it's not as secure. Paper check can be deposited at your check or your checking through in your checking account at your bank or your credit union, right? Um, a con of a paper check, though, is that when you deposit it, you could be subject to a hold at your bank. Maybe you have a new account that you're opening. They may put a temporary new account hold on it. You may have delinquent funds in your checking account, so they may put a hold on your account based on your relationship with them. Ways to get around these cons is that if your employer offers a direct deposit, sign up for direct deposit so you don't have to get the paper check. When you have direct deposit, it's the fastest, safest way for that money to get into your account. Funds are available immediately, and you wouldn't be subject to any holds that you would if you deposited a check, for example. I really can't think of a con for direct deposit other than maybe your employer doesn't provide it. That could be a con as well. Yeah, so let's go ahead and understanding pay statements real quick. This is important in understanding an earnings statement. So if you work a job or you receive a pay statement, you want to read it carefully so that you understand the information on it, because you want to make sure that you're being paid accurately and timely, right? So it's helpful to monitor the accuracy of it. So your pay statement may be called a pay stub, earnings statement, several different ways to say it. No matter what the name of your employer uses, your employer generally provides you with information about details that support the amount of income they're paying you for each pay period. And then depending on your employer, you may receive the information in a paper form, or you may receive it electronically. For the longest time, I can remember I always have been receiving my pay statements electronically, and it's through our payroll system through HR. Not everyone's pay statement is going to look the same, but generally pay statements are going to include your personal information, which is your name and address, for example, the pay period, the time period that you're being paid for. It could be a week, it could be 2 weeks, it could be a month. It just depends on what your pay period is at your employer. It'll also include a pay date. That's the date that you receive your net pay. It should include gross pay, how much money you earn during the pay period. The pay statement may also show year-to-date gross that has been paid from your employer as well. And then it should also have a section for deductions, the amount taken out of the gross pay for Social Security, for Medicare, federal and state income tax, elective deductions such as health insurance, retirement accounts, things like that. And then it'll have your net pay, which is the amount of money you receive after all deductions are taken out of your gross pay. Remember, it's your take-home pay. Any employer contributions, the amount the employer paid for your benefits, such as health insurance, for example. Balances for your personal time off, vacation, and or sick time. And when we're talking about making sure that there's accuracy on your pay, one of the things that I actually hear, not too often, but I've heard it from time to time, is that people's sick time and vacation time being messed up, where HR hasn't applied it properly. So that would be another reason that you would want to pay attention to your pay stubs, is to make sure that that PTO is calculated correctly. Yeah, so let's go into more specifics about the different types of deductions. Look, because some of them are required and some of them are elective, right? So required deductions is money that employers usually take out in the form of taxes to send to the appropriate agency. So taxes include amounts required under the Federal Insurance Contribution Act, or most commonly referred to as FICA. These taxes are set aside based on law as a percentage of your wages. FICA taxes include two items, Social Security and Medicare. So the Social Security deduction is often labeled as OASDI or SS. And then the contributions help to pay for, it's like a federally funded retirement account. That's the wrong way to say it, but it's like a retirement account. And then the Medicare deductions is some kind called FICA Med, FICA-MED, FICA Med, or just health insurance program for people who are 65 or older. And then taxes also include employer withholdings from federal income taxes, state income taxes, and sometimes there's locality tax too. Where I live, I do have a locality tax that's taken out of my check as well. No, those are a lot different than elective deductions or voluntary deductions, which often, for an example, would be like insurance premiums, union dues, charitable contributions, direct deposits to savings accounts, for example, if you have a split deposit. Retirement plan contributions can be required deductions or voluntary deductions as well. But you can ask your employer if you have any questions about how to read anything specific about your pay statement. And the reason I say that is that everyone's pay statement is going to be different. But most generally, those are the items that you'll see. Before an employer withholds federal, state, local income taxes from your gross pay, they're likely to ask you to complete forms so that you let them know what your withholdings are. So you'll complete a form for federal income tax purposes and possibly a similar form for state or community income purposes. You complete these forms and give them to your employer when you start a new job. I just recently had to do this as I just started a new job. So you can also give your employer new forms at any time you want to make these adjustments to your withholdings throughout the year. So consider completing new forms each year if you want, or you can just keep them rolling as well. For federal income tax purposes, you complete the IRS form W-4 employee withholding certificate. You can indicate if you want additional federal tax taken out above what's usually taken out, or you can reduce the amount of withholdings. But just remember, if you reduce the amount of withholdings, that you may end up owing more at tax time. If you indicate you want additional federal income tax withheld, your take-home pay is likely to be lower. Makes sense. If you indicate you want to reduce your withholdings, your take-home would be higher. But in that case, remember, you may end up owing more money in taxes when it comes tax time. But another thing to bring up that I usually bring up when we're doing this workshop is when my wife started a job a while back and she did the W-4 and we didn't withhold enough. And sometimes if you don't withhold enough when it comes tax time, you end up having a higher tax bill. So you kind of want to find the balance correctly. For more information on how you get that correct, it's going to be irs.gov. And it'll help you understand the withholdings. Going back to the pay statement, in the participant guide, there's going to be a section where we have this situation with Janice. And in this scenario, you're going to go through her pay stub to better understand what a pay statement looks like. I don't believe we have it here. No, we don't have it specifically here. But in the participant guide, you're going to see an example pay statement. And in that example pay statement, you're going to see all those items that we indicated 2 slides back. And the nice part of this exercise is it's going to allow you not only to understand the current pay that you got on your pay statement, but all of those current or year-to-date items as it's aggregated throughout the year with every pay period. So that's kind of nice to see. And then a breakdown of the deductions as well. But yeah, you can check that out in the participant guide. And after reading the statement, you're going to fill out the reading my pay statement in this form. And basically what you would do is you're going to take the information that you see in that pay statement in the participant guide, and then you're going to fill in the items like what are the pay period dates for it, what's the pay date, what are the number of hours, and that'll help you better understand how to read that pay statement. So let's jump to the or like if you're a small business owner or an entrepreneur and you don't have the W-4, right? So some people have more than one job. It may be full-time, it could be part-time. You may be monetizing a hobby, which we talk about a lot in these workshops. So while you may not have a job like that, you could be considered a W-2 employee. Or a 1099 employee. So if you receive a form W-2, the employer considers you to be an employee. If you receive form 1099 MISC, you're self-employed. Okay, so the two difference between that, and it's helpful to know if and when you get a regular paycheck or a pay statement, because the weeks, months between time you're paid could be different. And then the other reason why this is important is you may have to pay taxes yourself. And sometimes the tax withholdings are going to be a lot different depending on the type of income that you're receiving. 1099 miscellaneous as a self-employed, you're getting taxed you're getting taxed on the revenues that you're generating as a small business owner as well. So it's important to know the tax implications and what will be withheld if you fall within this type of employment. And that's why we say in here, consider putting money aside for the future, because your tax bill may be more than it would be if you were a W-4 employee, for example. Tracking income. So many people receive income from multiple sources. So for example, you may have a job, you may have a monetized hobby. You may get public benefits. You may have received a gift in the form of $100 for your birthday or something like that. Any money that's money coming in is money received, and that is income. Okay. So making a list of your income can help in understanding better about how you can save it, how you can spend it, or maybe share it in the form of a charitable contribution, for example. So we go through these things and we talk about there could be seasonal income, there could be regular income, one-time income, unpredictable income. In the bucket of regular income, it's basically money that you receive on a regular basis, could be from your job. You could receive money in the form of Social Security benefits, but that would be regular income. Where something like unpredictable income could be money in the form of maybe you have a monetized hobby, you run something on the side, and those sales kind of ebb and flow and go up and down. I bring up a lot that a while ago, and I want to bring it back because I had fun with it. I sold on eBay sports cards. It was super fun, and it was something that produced income for me, but really it was an ebb and flow kind of thing. So very unpredictable. Sometimes I sold a lot, sometimes I didn't. I would sell basketball cards, but if it was a basketball season, then no one really cared about basketball at the time, so business was kind of slow. So that could be considered unpredictable. And then you have things like seasonal income, where maybe you got a part-time job because they hired people during the holidays for like package delivery or warehouse work, for example. Seasonal income, that's like only maybe 3 months out of the year, right? And then one-time income is that money that we talked about in the form of maybe like you received a gift. And then in the participant guide, you'll see a monthly income lock. Now, this could be really beneficial if you have multiple streams of income, and it's a good way for you to understand the sources, right? The monthly amounts, but then you can put them in the different buckets, as you can see on the right-hand side. Identify that income as being regular, unpredictable, seasonal, or one time. And it could be useful in understanding the different types, right? And what you don't see here that you'll see in the participant guide when you fill that section out is below where it says public benefit one, because I don't believe, no, it doesn't keep going. We have things like any interest income that you received. And remember that that would be taxable at the end of the year. Or maybe you own equities in the form of stocks, ETFs, or mutual funds, and maybe those pay dividends. That would be a source of income as well, and that you'd be taxed at come tax time as well. Another thing on the bottom that you can't see here would be child support, alimony, or gifts. But yeah, you can fill that out. And one of the other nice things about the exercise is that you're able to identify it as not only regular, unpredictable, seasonal, or one time, but you can identify it as if it's an annual source, semi-annual, quarterly, monthly, bi-monthly, so that you can understand when that money is coming in on a chronological basis, right? Yeah, so that brings us to the end of section one. And really just the key concept here is understanding income, right? Understanding the sources, better understanding how to read a pay statement, and then better understanding the deductions and things like that, so you can understand better on how you're going to save and spend the different types that you receive. And then, yeah, so I mentioned that this one is pretty fast. The last section, now that we understand a little bit more about income, and again, a lot of this stuff is general, but still useful if it's applicable. But since we talked about income, the last thing that we have to do is talk about the opposite of that, which is expenses. And we're going to talk about tracking and managing those expenses. So the key takeaway is understanding your expenses. That will help you decide how to save, share, and spend your income. So several different ways to use money, right? And you can see right here, several different ways, right? So as we can see, you can go shopping, you pay for your rent, you can go grocery shopping. One of the things I always tell a story of in the leaky roof scenario, a year or so back, we were doing the workshops, and I ended up having to get my roof replaced. And in that year, I had to end up using some money in savings in order to get a new roof. So anyway, there's several different ways that we utilize money, right? we can save our money. So if you have enough money, God willing, to put some money in a savings account, you can save your money to build up an emergency savings fund to help you in case of, like I said, I ended up having to get a new roof, or in case there's a major disaster. Maybe you lost your job, maybe your hours got cut back, maybe you have an unexpected large expense like a washer, a dryer, or a refrigerator or something like that. Those things aren't cheap. The idea of sharing your money, right? This could be giving money to a gift to a family member for their birthday, or maybe you have a charity that you like to support and you give your money in the form of a charitable contribution, right? And then the other way is obviously to spend it. Basic living expenses like food, housing, utilities, debts that you owe, making sure that you're up to date on your credit card payment, that you're up to date on your car payment and stuff like that, right? So several different ways that people spend their money, right? And then better understanding how to utilize that income, how to utilize that money, is putting it in the three categories of needs, wants, and obligations. Um, so when we conceptualize the use of money that way, when we talk about the needs bucket, these are the things that you must have to live, right? When we put things into the wants bucket, it's things that we don't necessarily need, and it's certainly things that we desire, but we can certainly live without. And then obligations are essentially the debts that you owe. Borrowed money. It could be money that you owe in the form of your mortgage payment or your car loan, child support, things like that. People can consider needs and wants differently. So for one person, a smartphone could be a want. For another person, perhaps someone who needs a smartphone for the purposes of their business, for example, it's a little different, right? So asking yourself how you're utilizing your money and then putting that into the three separate buckets can help you determine if you truly need that or if it's something that you want. And it can better help you understand ways that you can kind of cut back, which is a great way to cut back on expenses, right? Because really, there's only two ways to increase your income. One, you can get promoted, you can get another job that pays more, you can monetize a hobby, things like that. But the only other way to bring in more income is to cut back your expenses, right? And one of the ways to cut back those expenses is to take out things from the wants category for the most part. So there's also, for people who receive public benefits, resource or asset limits may also factor into decisions about how you're utilizing money, right? So resource or asset limits tell you how much money and property you can have that allow you to still receive the full benefits that you've been getting. And then it's going to vary between the different public benefits programs. So it's probably helpful for you to do a little bit of research and some Googling to learn more about the different resource and asset limits based on the public benefit administrator website of where you're getting those benefits from. So it could be a useful tool in monitoring how your spending in a savings will affect these different programs. Using income to pay down debt or pay a bill early is one way to use income that you would otherwise put you over the asset limit. So use income in productive ways that avoid exceeding the resource limits. But again, you're only going to be knowledgeable of this if you go to the website of whatever administrator it is, so that you understand the program restrictions for it. I also have tracking expenses. Tracking your expenses helps you understand if you're using your money in line with your values and your goals. Tracking your expenses may also uncover where you can make changes, perhaps decrease spending so that you save more for your income. Tracking expenses also has another unexpected benefit. When you track your expenses, you usually spend less money. We'll look at two tools in the apply it section. And it's in the form of a My Savings Sharing and Spending Diary. Here it is. So in the participant guide, in this try it section or in this apply it section, the My Savings, Sharing, and Spending Diary, which is on page 16 of the participant guide, the first two tools that will help you understand how you're using your income, you can complete it after the workshop to track how you use your money each day, but preferably for one full month, right? So if so your saving, sharing, and spending is likely different and at different points during the month and from month to month. So for example, your rent may be due the first week of each month. That's why it helps to track expenses for at least one full month. To do so, you can make 4 or even 5 copies of the tool so that you can have all the expenses written down, because there's only, I don't think we have a full snapshot of this. No, we don't have a full snapshot. But when you're doing the My Monthly Expense Log, you're filling out these expenses, you're going to put the amount, and then you're also going to bucket them in those 3 buckets that we talked about so that you can understand a little better about identifying what a need, what a want is, and what an obligation is. And the reason that we're going through this exercise is so that you can find those items in the want category that you can cut out, because effectively cutting out those wants will effectively boost your income. Yeah, so that's really useful. And then we also have the monthly expense log. On the monthly expense log, we're going to, and we don't have a full capture of this. So in the participant guide, in the expense log, there's going to be a section for it where you have a My Savings category. And the reason that this is cool is that it'll allow you, once you've identified the My Expenses portion, any money that you have left over, you can then bucket into savings categories. And the first savings category that you're going to come upon is going to be an emergency savings fund. Yeah, so that could be useful in identifying that. But also in the expense log, it's going to allow you to better understand my spending. And in this section, you're going to fill out things like how much my rent is or my mortgage payment, how much are property taxes, utilities, water, electricity, gas, things like that, cell phone bill, internet, things like that. And then that way you can better track what exactly your expenses are. And then managing expenses. So managing expenses so that you can make payments in advance of their due dates helps you avoid things like late fees, interest on unpaid balances, negative credit card report entries, loss of services, additional charges associated with loss of service, like higher fees when you have to restart those services. So there can be different ways to pay bills, including in person, by mail, electronically, and perhaps using a mobile app too. You may be able to pay in person using cash or a money order, check, debit card, or a credit card. Some bills can't be paid in person, so you will have to send them by mail. And usually when you're sending these things by mail, you're usually paying by check or money order. There's some downfalls, some cons to paying by mail, like snail mail, right? It could take a long time for the postal service to actually get that payment to whatever creditor that you're trying to pay. So there could be downsides, but make sure that you get that postmarked as early as possible so that you make your payment on time. But in avoidance of having to pay things by mail, you can set up things to be paid electronically, right? So the payments can be set up as a one-time deal, or sometimes you can set them up to be regularly scheduled automatically to come out of your checking account. You can set up payments sometimes to your financial institution. You can set up payments sometimes through the actual website of the people that you're paying. It just depends on the type of payment that you're making. Hey, and sometimes the payments that are set up electronically can be as simple as providing them your debit card number to be paid electronically, or maybe your checking account number too. There's several different ways to pay electronically, but the best use of it is because the payment is usually done immediately. In fact, yesterday I made my credit card payment and I paid it through the mobile app through Chase, and I have my checking account linked to my Chase account, and I just go into the mobile app and I set up a one-time payment with exactly how much I want to pay. I hit the button and done. They receive the payment immediately. I don't have to send a check in the mail, and the payment comes out the next business day, which is really nice. And then also I got an email today from Spectrum, which is who we have most of our stuff through. That's a little bit differently. I have the app with that, but we have an automatic payment that comes out that's linked to my debit card. So it just depends on like who you're paying, but the benefit of the electronic payment is that it comes out immediately, which is really cool. And in the participant guide, we have a scenario with Monte Carlo. You can check this out after the workshop, and it's basically making a monthly payment calendar. This is just useful simply because I don't think we have the chart here. No, we don't have the chart here, but so in the participant guide, basically what you're going to see is Juan Carlo has a like a chart set up where he has all of his expenses that are coming out. So he has rent, a car payment, a student loan payment, a phone bill, a credit card payment, and car insurance. And essentially what happens is he has the monthly amounts in a column, but then he has the due date, and then on the last column he has the payment method. Some of these he pays in person, some by mail, some by electronic. But it's useful to make a monthly payment calendar to understand, especially if you have a lot of debts that you're paying, so that you know when the due date is, so that so that you don't get any late fees. So yeah, a monthly payment calendar could be pretty cool. We have a calendar that's up on our fridge that my wife fills out. So in addition to putting like family members' birthdays and stuff like that, and holidays and maybe days off that we took for a vacation, there's also some things written in there about like when certain things are due, so that we pay them on time, you know? So that could be super useful too. But yeah, so that is actually the last section. The key takeaway from this section, remember, first section was understanding income and ways that we use income. And then the last section is understanding expenses. And that brings us to the conclusion. But I did notice that we have a question, I believe. Where's the chat here? Oh, can we get copies of the form? Oh, yeah. So you'll get a copy of the presentation deck and the participant guide. But is there any questions before we wrap up that I may be able to help with?
I guess we're solid.
All
And
right.
all right, I'll go ahead and send that over to you, Irma. I'll send over both the slides and the participant guide for you. All right.
Thanks, Lisa.
Thank you, Tom. As
All
always,
right.
take care.
All right. Have a good night. Enjoy the rest
You
of the
too.
week.
You too. Bye-bye.
Bye.